Welcome, ladies, to the Real Estate InvestHER Show, providing inspiration, strategies, and insight to empower women investors to live balanced and financially free lives. Now, here are your co-hosts, Liz and Andressa.
So in today's episode, ladies, we have Leigh Leite. She started out as a single-family home investor and has navigated large multifamily as a result. I'm gonna love this episode. We go into so many different specifics about her journey. I think one thing you're gonna get a lot from is her relationship with brokers and how she was able to, move through that with not just grace, but with power and get a couple of her first deals underway and quite honestly, get taken seriously by brokers, which is always a hard thing. So you're gonna get some tips around that specifically today.
Yeah. And I want to make sure you guys understand this. We're going to go over what she said exactly when she called the broker. And we broke down what are those very important items and pieces of information that you can adjust for based on your story and your credit, your past, what you're bringing to the table. So you can really leverage that in order to build a relationship with brokers or with anybody that you talk to.
Welcome back, ladies. This is Liz.
And this is Andressa.
Welcome back to the Real Estate InvestHER Show, where we're so incredibly committed to empowering women to live a financially free and balanced life. Right, Andressa? We do that through all the ways that we're supporting women in building a global, intimate platform. So excited to be back with all of you each week. Thank you for being here. And Leigh Leite, thank you so much for being here and sharing your wisdom with us and the women here, and excited to jump into your story because you have a lot to unpack of your journey of investing. So thanks for being here.
Yes, thank you so much for having me.
Awesome. We're going to jump into your story in a moment. But as we always do, for those who are new to our podcast, thank you for listening. Thank you for joining with us. We want to make your time literally as best spent as we can. So we like to jump in, but we do like to certainly share a quick tip, something coming up for us because we're in this with you. And, we want to share what we're learning and growing through along with you before we get into our guest story. So what's coming up for you, Andressa?
So today I learned something new in the morning and I had like a aha moment, right? So for all of you that have been listening to us for all those years, you know how I feel about the privilege of being able to drop my son off at school and say goodbye to him and all of that, right? Well, we got to a milestone where I said, I would like him to start taking the bus, which is a small bus, not a huge bus, the bus that, because I don't want him to get super surprised later on and say like, what, it's a bus, right? That he said another day to me. And I was afraid of let go of that sensation that I felt every time that I dropped him off at school, that sensation of fulfillment. Oh my gosh, this is what's all life is all about, right? And then I was like, if I change that to the bus, how I'm gonna feel? I don't want to, do that.
That's true. Totally.
Well, but I felt the same way. And let me tell you what happened here. First, I was super afraid that I was going to be feeling like guilty and all of that. But the bus stop is on the corner of my house. I don't need to be on the freaking long line that doesn't make any sense for me for more than half an hour to pick up my son from school. And I asked him, how was your day? And he's like, good. That's all I get from my son, right? So the pleasure there was really mine, not so much for him. But one thing that I got it this morning when he went inside that yellow American bus was that I left and I felt it again. I felt the sensation because I focused on the gratitude. I was so grateful that I live in the neighborhood that I live. Grateful that I can drop him off on the corner. Grateful that there's a small bus and the bus driver is lovely, older, grandpa. Lovely, lovely. and that gratitude and that moment, I felt the same. So I was like, okay, I got the same sensation as before. And the reason why I'm saying this to you to relate to real estate is just because sometimes we get so attached of doing things one way that we don't open the space for other ways of doing the same thing. I gained on my day an hour and a half back that I could do whatever I want with that, right? But I gained that back without losing the sensation that I was always really hang up on. So I just wanted to share with you and encourage you to look around and saying like, what are the things that I am like really hanging on it for dear life, because I don't want to feel any other way, shape, or form. But I also don't see another possibility of doing. Encourage you to take a quick look at that.
I love that. And I love that you had this, you were connected to the feeling and then you were able to like recreate that a different way, right? Because it's not just the thing, it's the feeling we get. We get so attached to the thing too.
I thought was the thing.
Yeah, right. So I love that.
Yeah, great.
Good stuff. Good stuff. And I always wondered, not to go off on a tangent really quick,
Oh
but
gosh, what do you wonder?
But why aren't there seatbelts on buses? It's a little weird. Literally, there's like 30 children on a bus with no seatbelts.
Well, I asked that, right?
But
I
anyway.
asked that because the small bus, they do have it. The big buses, they don't. Long story short, listen, for that bus to something happen, in a crash, that's
right.
what I heard. It's impossible. However, I went to a pumpkin picking another time with my child. I was on the bus and I flew with a speed and like the speed bumps. So I do not have an answer to you.
I don't really try to think about it too long and just send my kids on the bus and pray. So that's my reconciliation there. But anyway, Leigh, thank you so much for being on our show. And we like to kick things off with what lesson has been the toughest or has taken you the longest to learn in your investing career?
Thanks for having me on the show. And that is just such a great question. And I would say that the thing that I would have changed is just not trying to do everything myself from the start. And if I had built my team and added more team players early on and really leaned into resources like coaches and mentors from the start, I think I would have gotten to where I am today even faster.
And we're going to dissect. We're going to dissect what is Leigh doing now, but talk to me about your journey for a second. Did you start with what you do right now in mind? Because sometimes people don't get started because they don't have a very clear picture. So I'm just curious to understand what was your thought process, how you got to where you are right now.
So I am actually a PA, a physician associate. My husband and I are both PAs, and we graduated from school back in 2010 with about $300,000 of student loan debt. And that felt just really crushing at the time. So we made a massive action plan to pay it off. And so we worked 2 jobs, 80 hours a week, nights, weekends, evenings, holidays, and we paid off that debt in 3 years. And
congrats.
Thank you. And in that process, we burn ourselves out. And I think a lot of professionals experience this. And it's kind of funny because I worked so hard and so long to get this professional degree. And I had my head down for so long. And I just assumed that when I got to that place, it would provide me the lifestyle that I wanted. And what I found was that it just wasn't true. So we just left everything for a year, just like totally went the other direction and went traveling for a year around the world. And during that time, we really got to pause, reflect, and really figure out what is important to us, what is important in life. And what's most important is time. And it's my time to spend with the people that I love. It is my time to do activities that I enjoy. It is my time to even take care of my health. And so we got back to the States and we started working again, but we knew we had to make a change. So we started a business flipping houses to primarily build capital. So whenever I do anything, I really like to just give it my all. So we created a business plan. We got a lawyer, opened an LLC, got our CPA, started QuickBooks, got our real estate agent, opened bank accounts. We got all of our ducks in a row, and we found that very first property. And it was so successful. So we did it again. And that first year, we flipped 5 houses. We did 5 burrs. And the business just took off to a point where we were flipping around 40 houses a year. And we built up a pretty sizable single family home portfolio and small apartment buildings. So 2020 comes along. And I think a lot of people were impacted by 2020. And we just really sat down and paused and said, okay, let's reevaluate this business plan. Let's reevaluate our goals. And at this point, I was nursing a baby. And I had a 2-year-old daughter, and I was still working full time as a PA in an urgent care through COVID with a N95 mask and a face shield on for 14 hours a day.
Wow.
So at this point, it wasn't just that I wanted my time back. It was really, I needed my time back. So I decided right then and there that I'm going to buy a large apartment building, and I went all in. And so that year, I underwrote hundreds of deals. I made so many offers. We got to a lot of highest and best tables, and it was really, really competitive. And we started an off-market campaign for multifamily in our area, which was great because we already had one going for the single family side. So we just transitioned that over. And in 2021, we didn't give up, and we finally landed our first big apartment building under contract that closed in early 2022. And all of those broker relationships, they paid off because right away, within 3 months, we closed on our next $12 million deal. So after all of that work in 2022, we've done $25 million worth of multifamily real estate.
Wow, there's a lot to unpack there.
I know.
And you know, let's start here, because I think so many people, so many women, I'll speak to that because we know we speak to them, we connect with them. So I know a lot of their we know a lot of their challenges and frustrations. Scaling is a big one. And so even just back to your journey of scaling from, you said five burrs to 40 in a short amount of time, right?
Yeah.
In a fairly short amount of time. I want to talk to that before we get to the multifamily, because there's probably a lot of lessons and a lot that you got that you're applying now, would be my guess. I don't know that. So what do you think would be like critical as you look back of, you know, maybe the critical things you put in place to be able to scale effectively? Because that's no easy feat, 40 houses a year. That's scale. And you know, some people want to get to 10 or 15. So walk us through a little bit about what worked for you and your husband. What were some of the key learned lessons as you look back, you know, as women want to scale any kind of niche, quite honestly, from flipping to another niche? What would be some key lessons or key things you took away?
The biggest thing is like I said, is getting it set up correctly from the beginning so that you're not trying to go back and fix everything. So just having those team members in place really allowed us to scale. We had a really an investor friendly agent who was getting us deals all the time. And we had a contractor who just really enjoyed working with us, and they were able to grow their team alongside ours. So we had the workforce in place. And with those two key players, the construction team plus the deal flow, I think it just allowed it to flow really, really well.
I'm curious too, because I see a lot of like planning before the shooting, right?
Mhm.
There's a lot of planning that you're sharing it. And you don't know when you don't know when you're doing certain things until it's like really in front of your face. What I'm hearing from you is that you had key players that were experts in the areas that you were not. Talk to me about from the team building point of view. How did you vet them and made sure that you were able to hold them accountable throughout?
So we started with referrals, which I think is really, really important to network with other investors in your area and find out who people are using and get word of mouth referrals. And we didn't just, dive in at 40 flips a year. We started out with just a few. And to be honest with you, we changed our team players a few times. So we went through 2 or 3 agents until we found one that really understood what we're trying to do. And we went through several contractors before we found some.
What, Lee?
Yeah.
Are you talking about contractors? Oh,
So yeah, it sounds easy, but it's not to find those key players, and it's trial and error. And then once you do find those key players, you've got to nurture that relationship. You have to treat the people that you work with really, really well. Specifically with contractors, don't nickel and dime your contractor. You have to have a mutual trust between you if you want that relationship to grow. Of course, you have to hold people accountable, but there has to be some level of trust in place as well.
Makes a lot of sense. So you're scaling, you're doing 40 deals a year. Walk us through a little bit of the transition, because I think that's a very important piece to your story. Often women are in one niche and they want to transition to a different niche because it has a lot to do with the market, has a lot to do with the economy. What works in one economy is a little different, or the approach is different. So it happens all the time. I know women are going through that right now. Multifamily, especially, being incredibly competitive and crowded. So you transition into, COVID was actually a great time because 2020, we bought some great multifamily, a little different than now, the numbers. But walk us through that transition. How did you mindfully, intentionally do that? Was that on intention? Walk us through that pivot.
So we really always had a roadmap in mind, and the goal was to step away from our W-2 jobs. The goal was to get our time back. The goal was to generate enough passive income so that we could replace the passive or the W-2 income. So we always knew where we were heading, and we also knew that we weren't going to flip houses forever. We were doing it because the market was booming and we were generating capital. But at the same time, we were using those skills to do the BRRRRs and to grow our portfolio to get the passive income. And it got to a point where we had really so many single family homes that it became a lot. And we said, well, what should we do next? How do we scale even faster? So the next really natural transition was to go into multifamily. We always knew we were heading there. We just didn't know exactly when. And of course, with the current market conditions, the flip market has slowed down. So I think we're just really fortunate with this timing.
I think you guys got prepared, right? I think it's not like just luck. Oh, I'm luck. I think that what I'm hearing from him, there's a lot of structure that was put in place. I want to touch base on one thing that you said about the marketing campaigns that you did for off-market deals when you were flipping, and then for the multifamily. And I don't think a lot of people are consciously creating campaigns and seeking properties. What I'm seeing is more the opposite. Let it come to me, all the, on the MLS or any All-Star or any other brokers. Share with me what did you think when you put those campaigns together? If you can break down for all the women that are listening that might want to do the same, what would you recommend?
So I didn't want to recreate the wheel, so I found somebody who could do it for me.
Love it, Lee.
Yeah.
I am into that.
Yes, I know you're big about that, Andresa. So we partnered with somebody who was already doing it, and it just really worked out. It was, mutually beneficial because they were finding leads and we were a buyer. So it was great. So we helped to fund that campaign, and then we bought the deals. And we used the same strategy of the skip tracings and cold calls to target multifamily in our area. We like to be local to have that just competitive advantage. And we found somebody for the multifamily, just a older owner operator who had owned this place for 30 years, just a couple blocks from the ocean front. And he was so tired of speaking to brokers, and he really just liked our story and wanted to sell it to somebody local who was going to take care of his property that he cared about so much.
Let's talk about that property. What size was it in terms of doors, and, give us some more specifics. That'd be great.
So this is a 62 unit apartment building, with a great location, and it had really been run to the ground. Not intentionally, but we bought it in a lot of distress. So we bought it with a 45% economic vacancy, which is pretty huge. So, but we had those skill sets in place. So we love to value add. We love to renovate. We love to increase those rents. And this was just really right up our alley. It was exactly what we could do and execute. So we knew we could take it down.
I want to just mention that so many people, when they looking to buy multifamily, end up going towards properties that need a little paint, need a little something. We're going to bump rents. We're not going to do too much to the building. Leigh, I'm also in the multifamily space as well as Andressa. And that's a common approach, literally, where people buy buildings, do nothing to them, raise rents, and call it like they're adding value when they've literally done nothing. And some buildings don't need as much, obviously. But I just want to put a pin in what you just said, is that there's actually less, the crowd is less, busy, if you will, for the properties that Leigh is speaking about. And I think in an economy we're in any economy, you have to keep asking the question, how do we observe what everyone else is doing and do the opposite? And you have to ask that question, where are the crowds going? And how can I, even in the multifamily space, even in the syndication space, we're even talking about syndicating a different asset class right now that's not as crowded, but will actually yield. We're running numbers, our team is running numbers, and actually the returns for investors are crazy, going from maybe multifamily to doing something a little different, still in the realm of real estate, of course. My point, though, is that in an economy that we're in, you have to be, if you're going to be successful, you have to ask those questions. And I think going towards distressed physically and from there's two ways of distressed. There's a physical distressedness of a property, and then there's actually a management distress of a property. And then if you add in the actual local market and how they're being perceived in the local market, that's another layer of distress. And those are the properties exactly that we have gone through in our tenure, if you will, because we got our start, with dilapidated properties. So those were actually our interest. Not everyone's interested. And I just say, you find a property that's in a great location and there's 45% occupied, most people are going to be like, no, thank you. And you'd be like, great. Again, as long as the numbers work and you have a transition plan, because there's going to be some serious stabilization happening. You're not getting paid day one. You're not getting paid probably in the first 1 or 2 years. I don't think, but that's okay. Right. Because you're building for the future. So I just want to make a pin in that, because so many people are like, how do I thrive in today's economy? Do what just Leigh just did, and stop running from the hard stuff, but actually going towards it.
Yeah. And especially now with labor costs increasing, it's difficult to keep your contractors. The cost of materials is increasing. I think you really do have to know what you're doing if you're taking down these really big projects.
Correct.
So like I said, we were comfortable with that. And we see other people struggling, and have a lot of gratitude towards our teams. We've been able to turn 80% of the building in 8 months.
It's
doing,
great.
LVP floors, new cabinets, granite countertops, everything. And we're increasing rents by $400 a door,
That's awesome.
Which makes me feel a whole lot better while cap rates are increasing, because we know our value's there.
Leigh, I think that like the first thing that comes to my head is like how prepared you guys were and the foundation that you guys creating. When you look back, right, you and your husband are Brazilian, by the way, people. That's why her last name is Leite, right, Liz? Trying to get that.
Leite. I said it correctly.
You did.
right now.
Right now. So what I was gonna say is that what are the transferable skills that you both brought in to the table, and what were the gaps that you guys found? Therefore, you needed teams to fill that up.
So we both come from a background in medicine, and we're very analytical people. I love math and science and systems, and so we both brought those skill sets to the table. And my husband in particular, he just really accelerates with project management and being on site and running the teams and working with the contractors. I really, really accelerate at the deal analysis, the financials, the business plans. And I think as a team, we work really, really well together. The people that we've had to bring in are other professionals to help guide us. So real estate CPAs, legal teams, and then eventually we brought in a coach to help us with the larger multifamily.
Those are great, Liz. But Liz, I always say Liz, Leigh. Those are great. Talk to me about the challenges that you guys face, because many investors investing together, many times getting to the marriage and the business doesn't have like a line to separate it. What were the challenges that you guys faced, and how did you overcome it?
I think you literally just said the biggest challenge, and that's that, it's hard to draw that line between marriage and business, because when I used to work in the medical field, I would come home and the day would be done. There would be nothing else and it would be just us. But now our business kind of follows us into the night sometimes. And so we've really just had to set those boundaries and say, okay, we are sitting down together every single day with our children at 5 o'clock without our phones, and we will not talk about any business. And the other thing that we do is we set these goals, and it's not just goals for our business, but it's also goals for our family. And that really helps us to keep on track and that work-life balance of, hey, even though we're a couple, even though we're running a business, even though this is our life, we have to keep up these other things in life too that are important to us.
And you also talked a little bit about, as we were preparing for today, about broker relationships. And I want to certainly talk about that with you, because especially, I don't know your personality, but if you're more interested in analyzing deals and more interested in math and science, I'm going to assume here, crazy assumption, but you're probably a little more introverted than extroverted. Is that fair?
That's a good assumption.
Okay. Totally judgment, but I'm just going to go with my judgments right now. So let's talk about that, because so many people pigeonhole themselves and saying, well, I don't know how to develop relationships with brokers. And it's, you have to on some level, even if you're going off market. That's critical to the multifamily game. So I'm curious, how did you get over that fear? What did you do? What were some of your ways of being that you would repeat and have repeated as you're building your own portfolio? Because you did something well as you're transitioning. So let's talk about that, and also brokers could be a little intimidating.
Yes, that's a great question. And I definitely feel that it can be a male dominated world with these big commercial real estate brokers. And I did have some fear, but at the time, like I said, it was 2020, and my husband, he was actually pretty busy running these projects of these 40 flips a year. And I thought, okay, if I'm going to reach this goal, if I'm going to buy this apartment building, I need to do something, and I need to do it now. And I was sitting at my computer and I was analyzing all these deals, and I saw this deal that I loved, and I was like, I need to get this one. So I picked up the phone, I called the broker, and he answered on the first ring. I said, oh no. And
I was praying that we went to voice message, right, people? Can somebody relate to that?
You're nervous, right?
Or like, for the love of God, goes to voice message. I don't want to talk.
And then what did you say to him or her? Like, I'd love to know what you said, because that's so, we've been working on that with some of our members, of just being able to share your street cred, especially you're moving into a new niche. So do you remember what you said to him?
I said something like, hi, my name is Leigh Leite. I'm a founder of 25/8 Capital. We are buying large multifamily assets. I've flipped more than 150 homes, and I love this deal in North Carolina. And he took me very seriously. We got a tour set up the following week, and it just went great.
All right. We can't do role playing on a podcast recording, but I want to break down what you said, because what you said is very much something that everyone listening can take as a model, right? For those like, what do I say? Because literally it's something we just worked with a group in our Strive group. Number one, you obviously were succinct. Number one. Number two, you upfront established your credibility and your street cred. And you did that. How you did. I'm going to go there. Don't you worry.
Thanks.
You did that by saying,
excited.
You did that by saying what your business, that you have a business, right? Obviously that's important. And number two, you then went into specific, but very quick detail of what you have done. I don't know what you exactly said, but you said we flipped 100 homes, or I don't know the exact verbiage. But numbers. So if people say, oh, I'm a real estate investor in Minnesota, sounds vague. If I say, I'm a real estate investor in Minnesota, my portfolio is worth about $14 million right now, and I'm transitioning into the multifamily space, would love to chat with you about the market. Very different. 14, because people hear numbers. Even saying, we have to watch how we say numbers. You could have said, oh, I've invested in single family homes. You could have said that, and that wouldn't have been very impressive. It sounds like you've invested. Okay, it sounds kind of wonky versus the number of 100. And even if, and I want to just make this very clear, as I think we're super passionate about this, everyone has something to share. Everyone has street cred, and your street cred is, don't dismiss it. Even if you've done 2 deals, we can look at those numbers, I'm sure, and pull out the piece that's like, okay,
highlight
it. I just really wanted to put a pin in that for you, Leigh, because what you did so beautifully made a difference, because then that broker is going to take you seriously.
Can I take one more thing here? Because we have a lot of realtors listening to us as well. So if you don't own your portfolio yet, which we are working with you with our EXP team in order for that to happen, I want you to, your street credit, talk about the transactions throughout your career or the past 6 months, 12 months. You put the numbers into the amount of transactions that you were part of. Don't forget that. Just want to make a.
I love that. And also we're going off on a street cred tangent here, but this is important because women undersell themselves all of the time. And we are on a mission to stop that. We have to stop doing that. It is not helping anyone. It's not helping our movement. It's not going to help young children, young women, young girls. For me to undersell myself, I'm teaching my daughter to undersell herself, right? So we're really big into stop doing that. And then I've changed my train of thought because I'm on my high horse.
No, we're going to go back to Leigh's conversation with the broker.
Yes. No, I had a thought all around that. I had another piece, but we'll move on. It's okay. I lose my train of thought a lot, but it's so important. I have it. Came back. I wanted to mention your street cred for new investors. I know what you're saying right now. You're like, I have no street cred. You do have street cred. You're alive. You have something in your world, in your professional life, that you can really, speak to. And if you have to really weigh down on your personality, I'm the most tenacious person you'll ever meet, and I'm X, Y, and Z. And so you can look at your story and pull some numbers and pull some street cred. To give me anyone, I can do that. We can find that for you.
100%.
I'm very passionate about it. We don't want you underselling yourself, not overselling, certainly not underselling. So Leigh, bring us back to the broker after we've got on our street cred tangent. You given him that elevator pitch. What happened after that?
We scheduled a tour and we showed up and we toured the property. It went really well, and we submitted our LOI and we made it to highest and best. And we were really, really excited. I got my lender lined up. I made even more contacts during this time with lenders, brokers, with insurance companies. I learned so much more through this process, and we didn't get the deal. But
wow.
Yeah, we didn't get the deal. But the thing was that it made me realize it was possible. It made me realize I could buy a $15 million property. I was approved to do so. So it gave me that much more confidence, so that the next time I got on the phone with the broker, it just really accelerated everything.
I'm curious. I love that. I'm curious, how did you quickly get up to speed with analyzing a new asset class? Because analyzing deals and building that confidence and that muscle is a big one, especially if you're used to analyzing single family home flips. Now you're moving into a different asset class, and there's a lot to that. You're not just analyzing the deal, you're analyzing your competition. You got to know what rent goes for. You need to know kind of your average, what each, door goes for, if you will, what the average is, what's high, what's low, what the amenities are. So it's a whole different, process. So I'm curious, what did you do to accelerate your skill set around analyzing deals when you made that transition?
I really taught myself, and I read some books, and I used some tools that were out there already. And I think just repetition really helped. The other people who helped me to narrow down my analysis were property managers that I connected with in that local market to say, hey, are these realistic expectations? Is this a realistic pro forma? Are these realistic rents? And that really helped a lot. And also my partners in the lending world helped me as well, because they do their own deal analysis. So what kind of lending can I get for this? Is my pro forma realistic? And I think just getting that constant feedback from people who are professionals in the business helped a lot.
I love that recommendation, because what's fascinating is that the lender and the property manager are only going to get paid if you buy the building. So, and if you start to build a relationship with them, it's in their best interest to help protect you and to build that relationship. Them helping you analyze deals cost you this, zero. And so I love that as a reminder. Lenders and property managers are such great team members versus, nothing against coaches. Sound like you had that, and mentors. Look, have them also help, but the lenders and the property managers are just a great point. How did you know you were working with a property manager of credibility? How did you vet that as you navigated large multi? Because property management companies are kind of like key.
We got recommendations from people in the business. I'm fortunate to have a good friend in property management, and she just gave me a lot of great resources and recommendations for my area.
So for Leigh being the analytical person who's an introvert, you build relationships pretty well,
Thank you.
and meaning that it's a strategy. It's a way of being. And introverts who are quiet or more analytical can be just as good at it. And they actually could be better in a lot of ways than extroverts, because you're sincere. And not that extroverts are not sincere.
Let's just bash all the extroverts
I totally just
out
trashed,
there.
but I could do
Well,
that.
I
I'm an
don't
extrovert.
care. I'm not one of them, so I did not take it personal.
But it's a way of being, and it's a way of building relationships. So I just love that you kind of, broke that down. So where are you going from here? You're still looking to buy more multis. What's your goal? What's your current goal? I'm sure you have one.
So this past September, I retired from my career in medicine. And
Awesome.
Congrats.
Thank you. I was really, really excited to do that, because I had set this goal for myself to retire by the time my daughter started kindergarten. She started kindergarten in September, and I wanted to do that so that I could be with her on holidays, Christmas, Thanksgiving, evenings, weekends, especially now that she was in school. So now things are going so well. What I want to do is I really want to spread the education to other busy working professionals, to other busy working parents, just about the benefits of real estate investing. So we are starting syndications. We've already completed one of our larger syndications this year, and it just brought me a lot of joy to bring in my family members and friends and colleagues into this deal, to allow them to own part of these large assets as limited partners, and to get those benefits from cash flow and appreciation without necessarily having to do it like the hard way. Although, as an LP, of course, you have to do your homework, but I want to spread the joy.
I love that. And that's a great way of saying it, because you're not just building your own wealth, right? You're building other people's wealth.
Exactly.
Very cool. Leigh, where can the ladies listening learn more about you and follow you along your journey?
So you can find us at www.258cap.com. You can find us on Facebook and LinkedIn at 25/8capital and also on Instagram, and reach out at info@258cap.com.
Awesome. All this information you guys can find on our show notes. Now we're going to transition to our fabulous 3 questions. And the first one, Leigh, we usually talk about the books, right? What's the most transformational book? I would say, what is the most transformational book in the niche that we just talked about here? Do you recommend to people?
So, I love all of the mindset books like Rich Dad, Poor Dad, The 4-Hour Work Week, Who Not How. But one of the books that really helped me early on was The Complete Guide to Buying and Selling Apartment Buildings by Steve Burgess. And, it's kind of outdated, but the fundamentals of the entire process are really there. And what I liked most about this book, being a really technical person, is that it has a glossary at the end of the book of 200 real estate terms defined. And because whether you are an active investor or a passive investor, if you don't speak the language of real estate, you're going to be in trouble.
100%. Leigh, what's the most powerful routine that you do to create a financially free and balanced life, whatever balance means to you?
So the most powerful routine that I do is with my husband, and that is the goal planning. And what we created was something we call the Freedom Sheet. And what it does is it calculates our income, passive income, expenses, net worth, and really helped us to determine how much passive cash flow we needed to step away from our W-2 jobs. But on top of that, we also write down our goals. And those are our goals for us as a couple, such as weekly date night, for us personally, such as health and fitness, goals for our family and our kids. And on a daily basis, what we can do is we can reflect back to those goals. And when we're looking at our tasks for the day, we can say, are these tasks moving the needle forward? Is what we're doing actually going towards our goals? And are we maintaining that work-life balance for the goals that we had for ourselves as a couple and a family?
Last question. Which woman, famous or not, has inspired you the most?
I'd say my grandmother inspired me the most. She was born in the 1920s and grew up in a time where women really were not investing in real estate. And she was building and selling houses along the Jersey Shore before it was developed, and also trading stocks basically until the day she died at the age of 96, never wanting to be reliant on anyone to take care of her. And she always supported me and my education so that I could always be self-sufficient as well.
Oh my gosh, I love it. Such a
That's so
pioneer.
cool. Leigh, thank you so much for being on our show. Excited about all the things unfolding for you as you navigate. So thanks again for sharing all your wisdom with us and our community.
Thank you so much for having me.
Thank you, Leigh.
Thank
If
you.
you enjoyed this podcast and want to receive updates on our next interviews, go to our website, therealestateinvestor.com. There, you can subscribe to our show, become part of our investor community, and get updates on upcoming episodes.
If you like our show, please share it with other women who would benefit. And don't forget to leave us a rating on iTunes. We'd really appreciate it. And as always, we encourage you to take one action as a result of today's show and put it into motion so you can live both a financially free and balanced life. Thanks for spending time with us.
Ciao.